That's what the majority of the world is buying. Or they're buying equities in companies that aren't returning profits. So what STRD is doing is they're taking the 600,000 Bitcoin that they have and they're creating Bitcoin-backed credit and equity instruments. So now they're selling equities, STRK, STRF, STRD, and the newest one, STRC. And it's creating a way for all of that institutional money, trillions of dollars, to now get access to Bitcoin through one of these types of instruments. And the market is obviously enormous. We're talking $600 trillion into a $2 trillion asset. That's the real game that's being played here.
Mark Moss explains that when Michael Saylor first turned MicroStrategy into a Bitcoin vehicle, the strategy was built almost entirely on debt. He borrowed billions at rates under 1% and poured it straight into Bitcoin. That was what Moss calls Strategy 1.0. The upside was huge if Bitcoin climbed, but it carried obvious risks. If the market turned hard against him, servicing that debt could become a serious problem. Now the approach looks very different. Moss describes Strategy 2.0 as equity-based rather than debt-based. Instead of piling on interest payments and default risk, MicroStrategy is issuing equity backed by its Bitcoin. That makes the balance sheet cleaner and the exposure more sustainable. What really matters, Moss says, is the next layer of innovation. MicroStrategy isn't just holding Bitcoin, it's creating Bitcoin-backed instruments like STRK, STRF, STRD, and STRC. These aren't direct Bitcoin purchases. Instead, they're structured financial products designed to fit inside the strict boxes that big institutions use when allocating money. Pension funds, insurance companies, and asset managers may not be allowed to buy raw Bitcoin, but they can buy these instruments. The scale is hard to overstate. Moss points out that global traditional assets amount to over $600 trillion, while Bitcoin's market cap sits around $2 trillion. Even the smallest reallocation, fractions of a percent, into Bitcoin-backed products could unleash a tidal wave of capital that fundamentally changes the entire landscape. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
So in the world today, we have about $1 quadrillion, $1,000 trillion of parked in what we call store value assets. In bonds and equities alone, there's about $700 trillion. Most of the world is not like you and I, or people even listen to this. Most of the world just has their paycheck, going into some mutual fund, 401k every 2 weeks, and some plan, some pension allocator is doing a 60-40 bond split and they're buying different instruments. That's most of the world. 97% of institutional capital, those hundreds of trillions of dollars, cannot buy commodities by mandate. They're just not allowed to. They can't buy gold, they can't buy wheat, they can't buy copper, and they can't buy Bitcoin. So what are they buying? Well, they're buying credit instruments and they're buying like equity instruments. So what do I mean by credit instruments? It's the fixed income market. The fixed income market is the largest market in the world. So if anybody's watched The Big Short, which was documented the real estate housing crash, you take these debt instruments, I have all these mortgage loans, all these auto loans or whatever, and then you package them up. You create a CDO, a collateralized debt obligation, and then you securitize it and people buy into it. The problem with that, as we saw with The Big Short, is that I don't really know what I'm buying. I'm not even sure what's in that package. I don't know what the ratings are of those things. So there's a lot of risk, number one. Number two, the returns are really low. They're paying me 3 to 5%. So I'm getting 3 to 5% on some unquantifiable risk that I have. And then to make it even worse, those are under leveraged. So meaning or under collateralized. So maybe I'm getting I'm 3 to 1 or something like that, right? So there's not enough collateral to even cover the debt we have against them. So that's the majority of the world today. I mean, obviously there's treasuries as well. Over the last 5 years, the U.S. Treasury, as measured by the TLT, which is like the long end of the curve, the long bond, the U.S. Treasury, which is the bedrock of the global financial system, on a Sharpe ratio, which is how we measure risk-adjusted returns, is more risky than Bitcoin over the last 5 years. And so that's what the majority of the world is buying. Or they're buying equities in companies that aren't returning profits. So what STRD is doing is they're taking the 600,000 Bitcoin that they have and they're creating Bitcoin-backed credit and equity instruments. So now they're selling equities, STRK, STRF, STRD, and the newest one, STRC. And it's creating a way for all of that institutional money, trillions of dollars, to now get access to Bitcoin through one of these types of instruments. And the market is obviously enormous. We're talking $600 trillion into a $2 trillion asset. That's the real game that's being played here. Yeah. So let's talk about that for a second. So I think a lot of people are misunderstanding what's going on. Even people that are running treasury companies maybe are misunderstanding, because Michael Saylor maybe sort of head faked the industry. So there was MicroStrategy, and with MicroStrategy, he took on a lot of debt. He raised billions of dollars at like 0.8% interest, which is like amazing. He took on all this debt to buy Bitcoin. And a lot of the market was like, but what if he can't pay the debt? And how will he afford the interest on the debt? And all these different questions have come around. And basically that's what you're asking right now.
Right.
But he changed the name of the company to Strategy. And now there's a 2.0 strategy. Strategy now, the 2.0 version, doesn't use debt. He's selling equities that are covered by the Bitcoin as collateral. Now, I said even people that are running Bitcoin treasury companies aren't really understanding what's going on. So a lot of these companies are they're raising 100 million of equity and 100 million of debt, or 200 million equity and 200 million debt, thinking still sort of in that framework. The company that we just launched now, Satsuma, which is in the UK, we've only raised equity and we're not taking on debt. We don't need the debt. So then you've sort of eliminated that risk.
Mark Moss points out that a quiet but massive accounting change just rewrote the playbook for companies holding Bitcoin. Under the new GAAP rules, unrealized gains on Bitcoin can now be recognized as income. For MicroStrategy, recently rebranded as Strategy, that meant a $14 billion boost on paper in a single quarter. Most investors haven't even noticed yet, but it completely changes how the company's financials look. Traditionally, a company like MicroStrategy would be judged on book value. If you just did that math, it would look like a pile of Bitcoin and some enterprise software revenue stacked on top. But Moss says that's the wrong lens. Apple, Tesla, and the rest of the Mag 7 aren't valued on book value either. They trade at earnings multiples that reflect the market's belief in future growth. That's the angle most people are missing. Saylor didn't just load up on Bitcoin, he turned it into the base layer for an entirely new business model. Strategy is now creating Bitcoin-backed financial products, instruments that could scale far beyond the coins they actually hold. The market hasn't caught up to this shift. The upside isn't only Bitcoin appreciation, it's the growth potential of a new financial architecture being built around it. Let's get back to the interview.
The real opportunity is what I call the escape velocity, is when Bitcoiners stop looking at it and TradFi looks at it. You see, something big happened this year that most people aren't even aware of. And that is that accounting rules, GAAP, changed the FSAB rule, which says that now you can take the asset base and the gain and call it income. And a lot of people haven't really caught on to this because it sort of just happened. And based off the amount of Bitcoin that Strategy holds, they posted about a $14 billion gain in the last quarter, which puts them into some of the top companies in size of that. And when you look at like high growth companies in the Mag 7, for example, none of them trade on a book value. It's not how you value Tesla. You don't value it on a book value. You value it on a PE ratio, a forward-looking price. So Tesla is about an 80 times PE ratio. So that means at its current earnings, it's going to take 80 years to get to that valuation. Most of the Mag 7's in like a 30 to 40 range, 30 to 50 range. And so based off of the new accounting rule change that just happened, that most people haven't caught on to, I believe Strategy should be valued more like a high growth company, like a Mag 7 company. And instead of trading at a multiple of its book value, because none of those are, it should be trading off of a discount to its future valuation. So then we go, okay, well, what's the future valuation? Well, they have over 600,000 Bitcoin now. I would imagine by 2030, they're going to have at least 700,000, probably a million.
Yeah.
But let's say they have 700,000. I think Bitcoin's $1 million by 2030. That means they have 7 trillion of book value. So even at their current multiple of 2, which doesn't make any sense, that's 14 trillion.
Yeah.
The most valuable company in the world right now is only 3.5. We're talking 14 trillion. But I think that's going to be even different. So I think that they will be trading a multiple to their future valuation, and let's call it not 30 to 50 like the normal Mag 7 gets, call it 20. or 25.
Right.
We're talking hundreds of trillions of dollars of valuation, which sounds incredible. And like, how could that ever even be? It doesn't make any sense. But that's where this is going, and I think the market is completely missing that. Because we have a new financial asset, it's the first new financial asset we've had in 500 years. And we have a new piece of technology that allows us to build things that we've never imagined because we didn't have the things that took to build the things. And so Bitcoin is this new financial asset that allows us to build these new types of companies and new types of financial products and a new financial system that we never imagined. And if we have to sort of break things down to more of like a first principles level to sort of see what's really going on. And if you think about a business, if I'm Apple, I sell a product like an iPhone, and I have to look at like, well, how big is the market for that iPhone, and how much more do I think I can grow the market, and what's going to be my profit margin on that product, right? So I think Apple posted like $94 billion of income last quarter and like $24 billion of profit, something like that, like really good. You have BlackRock is also a company, and they sell a product. They sell financial products. So they could sell like a $50 million slug of its, IBIT or whatever. And how much do they make on that? What's their profit margin? I believe it's about 0.25% per year they make for that. Well, now Strategy has a product that they sell, and it's called STRK or STRF or STRD. And they sell that into the market now. What's their profit margin? They sell a $50 million slug, they have a 50% profit margin. So they're selling products just like BlackRock or Apple, but their profit margin is bigger. So what Michael Saylor calls the durable business model. So now take that into consideration with the future growth and the adjusted gap metrics, and the valuations are higher than any of us can even conceive of.
What's unfolding with Strategy, formerly MicroStrategy, is less about one company's balance sheet and more about the blueprint for how Bitcoin could plug into the mainstream of global finance. By shifting from heavy leverage to equity financing, and by packaging exposure into vehicles that meet the compliance standards of pensions and insurers, Saylor has essentially opened the door for institutional capital that has been locked out until now. Combine that with accounting changes that suddenly make Bitcoin holdings look like a source of earnings rather than a dead weight, and the narrative around corporate Bitcoin adoption takes on a new dimension. If traditional markets, sitting on hundreds of trillions in assets, start treating Bitcoin-backed instruments as a standard allocation, the capital flow won't be a trickle. It could be a flood. That's not just a bullish story for Bitcoin. It's a sign that the rails of legacy finance and the architecture of digital money are being welded together in real time. The open question is whether this convergence turns Bitcoin into the backbone of a new financial order, or if the very process of institutionalization reshapes it into something that looks far different from the grassroots experiment it started as. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.